What's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. Today, we're going to be talking about the Bitcoin price chart and the potential for a new all-time high. Last week, I wrote a long newsletter about this over there on Substack, and I talked about something very similar last week with Ethereum. But I think it's something that deserves its own dedicated video here on YouTube, and we're going to talk about the complications of it. I'm going to present some cases here and show you the things that I'm watching for. Now, if you ask most people, they're going to tell you, yeah, Bitcoin will eventually set a new all-time high. But they'll argue that it's probably going to take until after the block reward halving before we can set a new all-time high. Why is that? Well, because shortly after every block reward halving, Bitcoin goes and breaks off into a new all-time high after a multi-year bear. It's like clockwork. Multi-year bear, Bitcoin block reward halving, all-time high. Multi-year bear, Bitcoin block reward halving, all-time high. Multi-year bear, Bitcoin block reward halving, all-time high. I mean, right? It makes perfect sense to jump to that conclusion. In 2012 and 2013, it was 92 days after the Bitcoin block reward halving, it breaks into the all-time high. 2016 and 2017 took 180 days to hit that all-time high. Then there in 2020, took 204 days to touch that all-time high. And well, we don't have another block reward halving happening until April of 2024 as the current anticipated date. That could change as we get closer, but that's when it's kind of expected, there in April of next year. So logic tells you we can't get to all-time high till at least after the halving, which puts you out there near the late part of 2024 or early 2025 by that logic, right? So what is the argument? Why would the block reward halving matter? Well, the idea of it is that every single day there are Bitcoin that are mined every time a block is created. Well, we'd like to think of it as miners and nerds hanging out with graphics cards in their mom's basement who are just stacking Bitcoin. The reality is these are large operations. These are big warehouses full of big mining equipment with large overhead expenses. There's a cost of doing business to earn a profit. The profit is the Bitcoin. They're not in the business of just sitting there and holding Bitcoin. They're in the business of making dollars. So every time that Bitcoin is mined, it is sold on the open market. Currently, about 900 Bitcoin are mined per day, which means that there is a selling pressure of 900 Bitcoin every single day. The moment the block reward happens, that will cut the total Bitcoin rewarded to miners per day from 900 to 450, reducing the overhead daily selling pressure every single day. So long as demand remains equivalent and sell pressure is reduced, what is the outcome? Price go up. It's a logical argument to have. I do not disagree with the fundamental argument that the block reward halving can cause price to rise because it just makes perfect sense. Miners are selling every single day. Miners have their supply cut in half. That means their sell pressure is cut in half. And if demand remains constant and sell pressure goes down, it forces price to go up. It makes perfect sense. The problem is the timing of these actual all-time highs getting hit and their correlation with the stock market rather than the block reward halving, which we'll get to in just a moment. But in this video, I'm going to make the argument that we could be much further along than many people think we are, that we could be as deep into a recovery as we were after C19, and that if we were to set a new all-time high, that it would not depend on the Bitcoin block reward halving, but that it would depend on the stock market, in particular the Dow Jones Industrial Average, being able to break out into a new all-time high, as it has been stuck underneath its retracement levels going on 8 months. So the first thing we're going to do is we're going to talk about the price behavior that we're exhibiting for Bitcoin and why it is acting like the behavior of going to an all-time high as it did back here in October, November, and December of 2020. Then we're going to talk about why we are deep enough in a cycle for that to be able to happen. Then we're going to talk about the one caveat that could throw a wrench in all of it, and that is the stock market. Now, if you've been following this channel, you undoubtedly have had this whole thing thrown in your face for several months on end. It is something I have been tweeting about on Twitter ever since April. I actually posted this, I believe, while I was in a hotel in Austin when I was at Consensus 2023. I'm not sure, but around that time, quoting my original tweet in which I had speculated that Bitcoin will have marked a local top for a few months, in which I kind of drew out my idea of a short squeeze taking up to near $30,000, followed by a fall, 702 retracement, and then turning back down into the 24,000s. That was the concept of this the entire time as it was posted here on April 21st. If you followed along with that, we watched it play out very well until finally it got down into the very last green box, and then we shot our way on out of there, just like so. But all based on this original idea posted here on April 10th and based on a video that I'd recorded here on April 5th on YouTube. But notice the fractal I'm using in this, as it was a common ABC correction that we've had happen here in the market. That is this same fractal that's been overlaid on here. We've been talking about this for months at this point. We could see Bitcoin's been behaving very similar and even starting to kind of get a little bit of attempting at breaking out currently as I'm recording right now. But due to the fact of it playing along like this and having an ABC correction to then now go on, and maybe we'll see it while I'm recording here, go on and set a new high above here. This is very similar to a 1, 2, 3, 4, 5 Elliott wave followed by an ABC to then go on and do another Elliott wave to the upside. In addition, the timing of this, obviously, as you can see, and the price levels of these things occurring at are very similar to what happened back in that time period of 2020. So we can grab these fractals all we want, but do they actually match price behavior and what was occurring when we're grabbing them and using them? This was a catalyst that happened here in 2022, FTX collapsing. This is a catalyst happening back in 2020. This is C19. We hold, move up a level. We hold, we move up a level. We ABC correct with technical precision. Then we go on and exhibit the exact same behavior. So the behavior we're exhibiting from price structure of moving up here is just like we did back in 2020, which, zooming out on it, inevitably led to a new all-time high. But just because that price behavior is similar and the fractals look similar, I think we have two things that definitely have to be answered here. One, just because it's following fractals and looking similar, does that matter at all for Bitcoin? And two, how can we argue that it could be heading towards an all-time high that quickly, which if you continued at that same velocity, puts you at an all-time high in 3 months or less? How could you argue that when it hasn't even been 2 years since the peak? That would make this the shortest bear market in the history of all time for Bitcoin, right? Or at least in the last decade. And so we have to answer one, do fractals even matter for Bitcoin? In which the answer throughout history has been yes. And two, we have to say, are we actually in the shortest bear market of all time? And we have to answer no, that we're actually kind of on normal track. And that this was not the top of Bitcoin, but this was actually the top of Bitcoin. And I kind of wrote it in a kind of a humorous way in my newsletter, but I said, if we had to say which one is the top for Bitcoin, was it this one or was it this one? And it's like, well, it's pretty obvious. The price here got to 69,000, whereas the price here got to 64,000. Math is pretty simple. 69,000 is higher than 64,000. That makes it obvious that the top was actually here in November of 2021. However, if we look at every other detail of the market when it comes to Bitcoin, it actually tells us the top of the market was back here in April and May of 2021, and we have a plethora of data to point to it. And just like we did with Ethereum, we have to argue that this is a expanded flat correction for Bitcoin, which is why it looks so different than all the other corrections that we've had for Bitcoin so far. So now we're going to answer the question about fractals. Then we're going to move on to an expanded flat. So first of all, can we just copy fractals and say, it's going to do it because it's done it before? Well, has Bitcoin ever done that before? Sure it has. We've argued this many times that Bitcoin has completed its third super cycle all throughout here, like its past super cycle was back in 2012 and 2013. And that even pausing along the way was all the same stuff for Bitcoin in here, and even the entire correction of 2018, 2019, and 2020 was just a drawn out version of what we did back in 2013, that they are really the same thing. And almost like C19 was baked into the cake for our correction along the way. And that we've now done 3 super cycles of this size and this magnitude. Secondly, we've definitely seen Bitcoin exhibit similar price behavior before where the fractals are nearly identical as we did from the actual peak of the market, as it was the same bear market fractal that we saw from back in 2018, that they were identical. And that if we take this and move it over there and stretch it to the appropriate size, holy moly, these are the exact same fractals. How is it possible that Bitcoin can behave exactly the same at totally different spots? But there you go. Do fractals sometimes work in Bitcoin, and are they sometimes nearly identical? And the answer is clearly yes. We see it here on smaller time frames, and we know it to be true on bigger time frames. And if we expand this out even further to say what happened after that, we could see that we eventually went the same. Time behaving differently, price level, price level, price level. Odd for it to happen, but definitely an unbelievable phenomenon we witnessed there in 2022 as we watched it all happen live. But that creates a good transition here because we can now say, well, why are we exhibiting a fractal right here from deep within a bear market for Bitcoin? And not only that, but for those who've watched the channel a lot know, we've even taken this one because this one even lines up with here. That if we take this fractal and move it over here and take a look, we'll see that Bitcoin even went the same distance as this one did. Again, stalling out with a little bit of an ABC in here to then go on and hit the final target just as the other one did. Again, a fractal playing out, but again, the question gets begged, why are we pulling these from way back in here and then they're showing up at the top and playing down? So I think the question can be answered on, does Bitcoin sometimes follow similar price behavior in fractals? And the answer is yes, it does. Even if you think, oh, this is nonsense, even if you think this is nonsense, even if you think super cycles are nonsense, good luck with saying this is nonsense. I can't help you. if you can't see that one, I can't help you. So we have to answer the question of why would this price behavior and why would this price behavior show up at the very peak of the market? Why would that happen from the very top? These are things that are only supposed to happen deep down into bear markets, and they're the moments that are heading into the capitulation and final ending of the market right down into here. And if you saw the Elliott wave video, I'll reiterate this again for those who didn't, is that it all ties back into Elliott wave theory. And Elliott wave theory is that we have a motive wave, and the motive wave is filled with 5 separate waves, 3 impulsive waves, and 2 corrective waves. Wave 1, impulse. Wave 2, correction. Wave 3, impulse. Wave 4, correction. Wave 5, impulse, and completion. And after the 5 waves are completed, we head into an A, B, C correction. That is your most simple explanation of Elliott wave theory. Now, if there wasn't more to it than that, I wouldn't have been able to put together about an hour's worth of videos here on Elliott wave theory on my website. But the super simplified version of that is what you see on the screen. 1, 2, 3, 4, 5, ABC. Obviously, it gets hard to see 1, 2, 3, 4, 5 in here. And it starts getting convoluted a little bit on where ABC can be in here when we're doing these things live and in practice. But the reality of these corrections is that they are ABC corrections that head back to the lows of A, B, C. As we can see here, 5 waves up, 3 waves down, 5 waves up, 3 waves down, 5 waves up, and then A, B, C. This is our most simplified Elliott wave. But what we do have is something called a flat. It also consists of an ABC correction. However, the expanded flats B wave actually sets a new high. As I show in my video, as I have in the PDF files, we could see the B wave goes above the height of wave 5. As you can see over here on stockcharts.com, B wave exceeds the height of wave 5. And as you can see over here from ElliottWaveForecast.com, B wave exceeds the height of wave 5. We can have an ABC correction that is not our typical ABC, but we can actually have an ABC correction where the B takes out the height of wave 5. And so what we have to argue is that this is an A, B, C expanded flat correction, which is why it does not look like what we are used to seeing. We are used to seeing blow off tops, followed by big 70% crashes, followed by a B wave, followed by another fall. In both 2014 and in 2018, we initially saw 70% crashes, followed by 100% bounces in both 2018 and there in 2014 that we saw 70%, 100%, then the big tumble. This big tumble right in here back in 2014 is 77%. This big tumble right here in 2018 is 73%. We could see that just by putting our measurements down. Leg C ends up being 77.5%. Leg C ends up being 73.42%. What do we notice here about Bitcoin coming off the very peak here is that it does end up being 77%. So right there, 77.5. What did we say this one back here was? 77.5. Again, the A wave is only 70%, right? 70.5. I believe this one is like 69, 69, almost 70. So if we were to say, no, that's wrong, this is an A, B, C, well, it sure is odd to get 77% on an A wave, right? We know that's not true. We get the A wave of 70%, and then the C leg is 77 or 73. Yet we go ahead and have 77 currently from the current location we're at, and it's the same structure as what we do for an actual C leg. So we have a little bit of validity here, at least from the price behavior for an A, B, C. Not only do we have, price behaving that way, we also have price behaving this way too, right? But we have shown this many times, and you also have to argue, well, then you have to have like proof, right? Is there any proof that this is the peak? I mean, that's what we are arguing. We are arguing this is the end of the bull market here. This is an expanded flat correction of ABC. Our C leg happened. Our C leg was taken from our C legs from back in 2014 and from 2018. Does the underlying technical behavior of the market also corroborate that? That's where we can move to these bigger time frames, and I'll take most of this stuff off the screen just for a moment so we could see it a little bit clearer to see what happened in each moment as we hit our top and then as we hit our bottom. And the first thing we'll do is we'll just mark the top, right? We see a complete fall off of the relative strength index here straight from the top. Let's go over here to this top. We'll mark it. We see a fall off of the relative strength happen from right here. And let's go ahead and mark this one. What do we see? A fall off of the relative strength happening in here. We have signature indicator and oscillator behavior happening on the monthly time frame, right? A huge time frame showing us falling off a cliff happening back in April of 2021, not in November of 2021. The same is also true when we hit the bottom of the A leg, right? A, B, C. Notice how the stochastic RSI is just still in free fall down here. Notice how the stochastic RSI off the peak here is just in free fall, even in A, B, C, free falling, dead, right? What do we have happening in here? Free falling, right? Free falling. And then it kind of catches itself here for a second, right? When? Back when it's doing the expanded flat B wave as it did back in here, right? Then boom, right? Catches itself a little bit down here for that B wave, right? Catches itself a little bit for the B wave, boom. In addition, we can even move down here to the MACD, and we see the MACD turns over where? Right there at that same point, right where we're seeing all of this happening at, which is the same place where we saw the MACD turn over, growth stops, and then it flips over. Bull market over, bull market over. So when we account in for the fact that we've already acted like the C leg has taken place in here, and we've already had all the signatures that happen in here that point to the peak of the market happening back here, back in April and May, really the only logical conclusion to jump to is to say it's an expanded flat correction. Otherwise, why would we have the C leg emerge from the very peak of the market? Why would you get this type of structure to happen right at the peak unless if we're having an expanded flat correction? That's the only logical explanation of it, right? Why would XRP have an A, B, C correction with the B wave peaking over here in late 2021 and the peak of XRP being back there in April of 2021? Why would so many coins have their peak happen back here in April and May of 2021, unable to set new all-time highs in October and November of 2021, when they all peaked with Bitcoin peaking back here in December and January of 2017, unless if the peak of the market all took place back here and not here? Why would all the oscillators act like this as they have at historical tops unless if we were already peaked and we already had an expanded flat correction? And as we all should know at this point, whenever you are having extreme exuberance, extreme euphoria, what happens? Financial media coverage, retail investor euphoria. Did we have both of those things present this time, unlike this time? And the answer is yes, because what did we have? We had laser eyes, we had diamond hands, we had extreme excitement, investors just going crazy. It's just mainstream media news. It's an internet phenomenon. Bitcoin, Bitcoin, Bitcoin. Kevin O'Leary, Jim Cramer. And even when we look at Google Trends over here to see the search history for Bitcoin, we can see the interest of retail investor behavior is there in May, April, March, February. Then you head over here to November. Look at this. There's like no interest, right? There's interest once it's crashing and crumbling, right? It's heading to the ground, right? Luna, UST, Three Arrows Capital, Celsius, all that stuff. But look at this. This is the brand new all-time high for Bitcoin. Retail investors don't even care anymore. Retail investors were all euphoric back in May, April, and March of 2021. And as we've shown over here on Glassnode, we have shown that the distribution by larger wallets all took place in here as they historically do at actual peaks. And there was no distribution happening here in this peak. All the distribution happened right here at the euphoric peak of the market as the distribution took place here into the euphoric peak of Bitcoin back in late 2017, early 2018. We could see that here in that last run up where Bitcoin goes from $10,000 to $20,000. These wallets all are selling and distributing into that moment. They sell and distribute even into the retrace. They're out. Then they don't come back in at all, which is exactly what they do into the peak in March, April, and May. They distribute into the euphoria. They don't come back in until now. So when it comes to April and May, we not only have the Google search history for Bitcoin, we not only have the distribution on-chain data from Glassnode, we not only have oscillator behavior showing that that was the peak of the market from back there in April and May, as we saw back in 2017 and 18, but we also have fractal behavior that is also the same that took place down there, where we have C-leg fractals also showing up from the peak and behaving similarly in line, both 77% for the fall. For the conclusion, everything points to expanded flat ABC correction. These are irregular. You don't see them all the time, but they are normal. And we've seen them other times in crypto too, in both Bitcoin and in Ethereum, but not just from retail euphoria, then a lack of retail interest, from on-chain distribution by larger wallets and whales and smart money, then no interest, then all the oscillator behaviors happening in here, and then having C legs and bear market price behavior emerging from the peak. All of these different things all point to the market topping back in here with laser eyes and diamond hands and Wall Street bets, and that when we set the new high, it was an expanded flat correction followed by 1, 2, 3, 4, 5, which is why we saw the capitulative C leg show up from both 2018 and 2014 right here in this leg, coming in at 77% as we did in the past. That's the ridiculously strong argument for expanded flat completed correction for Bitcoin. But what does that also mean? That means that Bitcoin's bear would have begun back here and not here. And how many times are you hearing everywhere everybody's saying the bear market has started here and that we can't do anything until this, we can't do anything until that because of time? How many calculations are using that as the starting point of time? Because the cold, hard reality is, if that's true, if this is the peak of the market, which I think we've done a pretty good job building the case that it is, then what does it say about time actually happening in here? 4-year cycles. Well, that wasn't 4 years. That was 40 months. Compared to 49 months in the last one between peak euphoria and peak euphoria. No, don't you understand? We set the high here. That's why it counts, block reward halvings. But that wasn't the case for the market. A lot of it all topped there. And just because we went and set a little barely new high, who cares? The market peaked here in April and May, and that there was actually only 40 months between peak euphoria in peak euphoria, and we see it in all the oscillators. Even if we just look down here, right? Peak euphoria to peak euphoria, 49 months. Peak euphoria to peak euphoria, 40 months. Technically, 39. If you're leaning on has to be 48 months, needs to be 4 years, that's just not the case. I mean, it's even just as simple as looking at Litecoin from back in 2013, from peak to peak, 49 months. From peak to peak, 41 months. Again, Litecoin even has the 4-year block reward halving. Why is it only 3 years and 5 months in between? We have 4 years and 1 month. You have 3 years and 5 months, unless there's something different at play than the block reward halvings. But if we argue that the peak of the market is back over here, and we do have to take just as long as it takes to work its way back up to get into a new all-time high, then as you can see, even in this circumstance, it's already in its trajectory up there to head towards that way. We are way past capitulation time points. I remember all the people using this one saying here, using this one saying here. Even in these, obviously you're way past capitulation, but the market shows it very clear. The peak of the market is back over here. This is the peak. And that in this circumstance, you are working towards your all-time high currently. So is it in any way appropriate to do what we talked about from the very beginning of this? And that's, can we grab this thing and say, hey, it's kind of like we're in something like this currently right now, because price has behaved like this. We got the ABC correction where we're supposed to, time aligns with it at the same time. Is it appropriate to even be discussing that we could be working our way towards an all-time high? If your argument is it has to be 4 years, well, didn't we just go ahead and dispel that by saying, it's 3 years from between peak euphoria and peak euphoria? Was it 3 years and 5 months? That it's not exactly 4 years? Litecoin, right? Is a 4-year argument even valid at all if it's not 4 years? If there can be a separation of time of 4 years and 1 month and 3 years and 5 months, is it even appropriate to even discuss it and say 4 years? But even if you did, what would you have happening in here? You have A, B, C, capitulation with a catalyst, works its way back up with 3 waves. It has an ABC correction. It is at a point where a completed capitulation would have at least been finished. The argument here at this point is, no, it hasn't consolidated long enough. It has to consolidate longer because of magic. 4 years. Block rewards, which we think matter, but we don't know because it obviously didn't matter on Litecoin. And I don't know what to think about your 3 years and 4 months between peaks there. But no, it must consolidate longer because block rewards. But is it block rewards even at all that has anything to do with the timing of the cycles and the breakouts of them happening? And I'll keep this relatively brief to at least keep some of the info here on my website. But what you'll find is that there's 91 days after the block reward halving, but it's only within 13 days of us breaking out from the great financial crisis highs back there in 2013. And that it's 182 days to hit the all-time high after the block reward halving. However, it's within 56 days of the Dow Jones leaving a multi-year range that it started right here. And then when we go over here to 2020, it's 203 days to hit the all-time high after the block reward halving. However, it's only 21 days after the stock market clears its all-time high from a multi-year broadening wedge or broadening triangle. And what we find is that there is a much tighter correlation between when Bitcoin is breaking out into these all-time highs and when the stock market is breaking out into these all-time highs. And so while we have all of this stuff lining up, we have this price behavior acting like this while we're through the entire correction of what would be appropriate to be done, the big question is, can we go up there? Can we break out and set a new all-time high? And can we do it pre-block reward halving? Well, the answer is that, at least from what we've seen the last 3 times, is it requires the stock market. Every single time it has required the stock market. The longest time period between the stock market having a multi-year breakout and Bitcoin is a 56-day gap. Otherwise, it's been 21 days and it's been 13 days. The tightest spread between the block reward halving and the all-time high is 91 days. That's the tightest spread. Otherwise, it's 182 and 203. But what's happening at these same times is these big ranges that are happening for the stock market, and it's happening right when the stock market is breaking out. And if the stock market is set to go break out into new all-time highs, because it seems incredibly unlikely the block reward halving even plays a role at all. Everyone talks about, hey, look, see, we always bottom at the same time. This is January of 2015. See, we peak in December of 2017. See, look, we bottom here, December 2018. See, it's almost January, right? You've essentially got 4 years between here, right? You've essentially got 4 years between here. Peak to peak, 4 years. Trough to trough, 4 years. Go with the same idea, peak to peak, almost 4 years. Trough to trough, almost 4 years, right? 1,477 days, 1,428 days, 1,428 days, 1,442 days. But what's not consistent, if you're going to say it's block reward halvings that are causing these peaks and these troughs to land on these 4-year time periods, is why is there not that much time between block reward halvings? Why is that 1,316 days? Why is that 1,407 days? Why is there less time between the block reward halvings than there is between peak to peak and trough to trough? If the block reward halving was in charge of these cycles happening, wouldn't there be some type of correlation of the amount of time? I mean, right? If you use peak to peak and you say 4-year cycles, well, from those two peaks, that's 2,905 days. If you take those two block reward halvings that happened there, that's 2,723. That's 6 months. Where's the 6 months? It's a gap. But where there's very little gap is right here with the stock market and the Dow Jones breaking out from multi-year bear markets, that it does it at the same time. And if we're on the cusp of that happening here for the Dow, for the NASDAQ, and for the S&P, well, there's all types of variable times on how long it is after the block reward halving, but the most we've ever seen in history is 56 days for Bitcoin and the Dow. And it wouldn't be too far-fetched to shoot your way up there should the stock market go. But as we mentioned at the beginning, what happens if the stock market doesn't go? The answer is we don't know, because the only thing that has ever happened is that it does go, and when it does go, Bitcoin goes at nearly the same time. And if the Dow is not going to go, we don't know what Bitcoin will do, because Bitcoin was created in 2009 at the bottom of the great financial crisis and has only existed in the greatest bull market of our lifetimes. But what we've seen every stock index do, at least up until this point, is head back into retracements, which Bitcoin is nowhere near. All of them have gotten up here to what would be equivalent to, for Bitcoin, to like $50,000 to $52,000. So even shifting back to those levels is not unrealistic based on what's going on with the stock market. But after everything we've seen in regards to where the peak of the market occurred, the price structure we're seeing happening in here, I don't think it can be ruled out that we can't go to an all-time high and do it relatively soon, within like 90 days. But the thing it would definitely need, if history is any guide, is for this guy to go too, for the Dow Jones to go as well. But the peak of the market, from every metric except price, from Elliott wave theory, stochastic RSI, relative strength, MACD, whale distribution, retail euphoria, altcoin tops, everything puts it back here. And that we're much deeper into this than people think, who are still looking at this, which, again, in addition to everything, was the C-leg fractal that did play out. So can we have something like this? Can a fractal play out? You better believe it. We just saw it happen many times. Bitcoin is obviously one of the most notorious ones to do it. And from time, it's on track. As for me, I've always said, I've thought Bitcoin would go back into a retracement. I see the clear setup. I see how much time has elapsed in this market, that it threw a curveball in the market of what appears to be an expanded flat. And if that stock market goes into an all-time high, it'll be hard to argue that Bitcoin isn't doing it as well, as it has done everything that it has done historically for bear markets, and has done all the things that are marking the end of bear markets, as we see in each of these bottoms, and as we see even the MACD is starting to flip this month in July. So for me, I'm keeping my eye on this guy because nearly everything on Bitcoin says it wants to go. And it does not appear that the block reward halving matters at all. And that we have all the indicators we need, just as we historically have, for things to be turning into the right direction. And these are all on giant time frames. And I think the mistake a lot of people are making is looking to this being the top when this is actually the technical top. And we're much further along in here. The big thing is this guy. This is the nail biter, the stock market with the Dow Jones, the NASDAQ, and the S&P 500 all sitting in here. There's a reason why in the intro of my video, the character's sitting there. It's got the 702, scared, and then finally breaks out and goes. But it's because that 702 or even the 786 Fibonacci retracement levels can just be such a nuisance. They can be the rejection levels and downtrends. And for me, all eyes are focused here to see, can we go ahead and get the breakout to go? Because history has pointed to a much tighter correlation between these breakouts happening and Bitcoin breaking out into all-time highs rather than the block rewards, with inconsistent time frames and sometimes being almost 7 months after the block reward halving, whereas there's never been more than 2 months of the breakout correlation between the stock market and Bitcoin. So the setup on Bitcoin looks great. All the indicators have flipped back to the upside, and we're over a year since our technical bottom was in, which we've even seen a lot of these altcoins that their technical bottoms were in over a year ago, such as XRP, Ethereum, Litecoin, Doge, etc., like the ones we talked about that all peaked in April and May of 2021. So my eyes are all focused on this thing, the Dow Jones. The case that we are significantly deeper into this with an expanded flat is strong. The big question on the market is, can Bitcoin finally work its way back up to the retracements? And when it does get back up there, will this have already broken out and gone, or will it still be stuck here? And well, with Bitcoin having a very similar fractal as the recovery of 2020, and knowing that Bitcoin does use repeating price behavior, and knowing that we're much deeper into Bitcoin's correction than just saying the top was in November, but that the top was in April and May of 2021, it seems like there's no better shot than anything right now. You've probably heard it many times on this channel over the past week or two, how excited I am about the market. As many know, back in April, I'd been looking for an ABC correction to emerge, which was based off of this particular moment in time, as we discussed already. All of that has completed, and the next phase after this particular moment in time was price go up. And with all the debate about block reward halvings, all the debate about the stock market, where the top of the market was, how deep into this are we? We can't go until 2024 to 2025. I wanted to give a little bit of a different view than what the general accepted view is by the majority, and to say it's more nuanced than what most people think, and hopefully it gives you some food for thought. So, all right, that's going to be it for this one. This video got so long. It's taken me 2 days to make this whole video, and wow, 40 minutes. If you enjoyed this content, if you enjoyed this kind of educational content, it's very similar to stuff that's over here on bcbacker.com, which is a course that I put together. It's got over 40 videos. It's over 11 hours of content on here. There's stuff in here just like this, talking about Bitcoin versus the stock market versus the halving. You got kind of a dose of that. There were a couple pieces that were left out here, but you got really the majority of it all in here. But we have a lot more other educational stuff when it comes to historical behavior of the crypto market. And of course, talking about a lot of things, really expanding on Elliott waves and all the rules, and more than just 1, 2, 3, 4, 5 ABC, but going into all of it, along with Wyckoff accumulation, distribution, and other things of market experiences that I've learned over time. Then for those who are just like new to charts in general, just kind of walking you through it and trying to make it easy to understand, along with some of the most effective and common tools that I like to use. But you can check this out over here on bcbacker.com. There's also a link in the description of this video. One time, $39, no subscription, no recurring fees, content's yours. It includes PDF printouts for you and also links to additional learning material so you can further your education if you decide you want to expand on the things that I talked about. But otherwise, I hope that you guys have a wonderful week. I want to thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you could be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor, But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.